Good morning, good afternoon, good evening, depending on where you are on this wonderful planet. And welcome to the Wednesday, the 5th of October, Bull versus Bear webinar. Steve Miley on the call for trade day. No webinar yesterday. Apologies if you came on. I have put stuff in the site activity and the update and the heads up and everywhere. We did put stuff in there, so apologies if you came on yesterday and we weren't on, but I did put notifications. Do please check those going forward, guys. Do please check the site activity feed in the members area, and also the scrolling headline that we have running across here. I always post it up there if we're not going to be doing a webinar, so you guys, and we always put it up pretty much unless we have a technical fault, we always put it up the day before. So do check those before. I don't want you guys setting your alarms bright and early and we're not on the webinar. We've cancelled it for the day. That being said, there may or may not be a webinar tomorrow as well. So that's not 100% nailed on. So please do check the activity feed. Do check the scrolling heads up banner on the members site to check that we are having a webinar tomorrow. But today's one is certainly going ahead, and here I am. Now, I did get a question in the chat a couple of days ago regarding looking at the FedWatch tool. So we're going to have a little bit of a look at the FedWatch tool today. Just kind of, a little bit more of an explanation of what it is and a little bit of an explanation of how I use it, which I don't really use it, actively day to day within the trading, but I certainly have it in the background as a bigger picture, like helping and assisting in my kind of macro view. Okay, so we'll have a little bit of a look at that. But first of all, I'll just go through the regular run through in here today. We'll take a look at the calendar. We'll take a look at the major news wires. What are the macroeconomic fundamental data points that are impacting markets right here, right now? We'll take a look at that FedWatch tool, and I'll go into a deeper dive and explanation of that, but not too deep a dive, so it's going to take us a few minutes. And then I will have a look at some of the trigger points from the charts. So let's kick off with the calendar. We have had service sector PMI data in here this morning, mixed, mostly negative though. So you can see in here from Europe, we've had misses from France, Germany, and the Eurozone as a whole. Not big misses, only very slight misses in here, and a slight beat from the UK, surprisingly. So a mixed, but mostly negative, but not massively negative in here this morning. Going into the balance of the day, OPEC are meeting today. Now, usually from the OPEC, this is their first face-to-face, by the way. I've got some articles from the major news wires. There's an anticipation already priced into the oil price. Just make the note of that. And the oil price has moved higher significantly over the last week. The pricing in, the talk is of a significant cut. Okay, a cut in production of up to 1 million barrels a day. Could be more, could be less, but that's the kind of number that we're kind of looking at, a cut. And they say first face-to-face meeting post-COVID. And usually you get something from that, usually in the European afternoon. So I'm going to say from about 1.5 hours time, 2 o'clock through 5 o'clock UK time. So that is going to be, sometime Eastern time around, I don't know, between 9, 10, 11, 12 o'clock, something like that is usually when you get something out from OPEC. So we're looking for that today. Okay. And so obviously if that deviates from the kind of the market rumor, the expectation of that around $1 million barrels a day output cut, then that could have an impact on the oil price, and that can have obviously a knock-on effect into stock indexes as well, stock indices and averages. What else do we have? We have ADP employment change. Remember, the ADP employment change is the forerunner. It's the guesstimate. It's the prediction of what the official non-farm payroll number is going to be. Okay. Now, this number, this ADP number, when it was launched, God, I don't know. I remember when it was launched. I don't know, somewhere between 5-10 years ago, something like that. Maybe longer. Actually, no, it's longer than that. I think it was really a big deal, and even up to about 5, 6, 7 years ago, it was a really big deal. It did used to impact markets. It did used to move markets, like the employment report does. Obviously, the employment report at the moment is having less of an impact on markets because we're all focused on inflation, and we're not so much focused. But it is becoming more coming more and more into play, the employment report anyway, because we're watching out for that slowdown, right? We're watching for the very sort of still very tight labour market, the still very strong labour market to start to slow down, and there's already been some little warning signs of that. So we're going to be watching that anyway. So maybe ADP will have a bit more, start having a little bit more of an impact as the employment report becomes a little bit more important. So ADP employment 39 minutes from now. So we're certainly watching out for that. What else do we have this afternoon? We have then the service sector PMI data from the US. Now remember the S&P global number, that's at 9:45 Eastern. Okay, so that number there is the not so watch number. Even though S&P global number for the rest of the planet, these numbers we've had this morning out of Europe, are the more watch numbers. Okay, the bigger number is the ISM, the internal number, the Institute of Supply Management in here that we get from the US. That's at 10 a.m. Eastern. So 9:45 Eastern, the S&P global numbers, but more important is the 10 o'clock numbers from the ISM. We also get crude oil inventories at 10:30 in here. Now, whether that has an impact, given that we have the OPEC number, is unlikely, I should think, that they're going to have a massive impact, depending on which side of the OPEC decision we get those coming out. And then we get Bostic speaking later today, not till 4 o'clock in the afternoon Eastern time. Okay, let's run through some of the headlines. 5 things to start your day from Bloomberg. Elon Musk is back in. Back in to buy Twitter at the original price. He sent a letter. So yeah, I mean, blimey, in out, shake it all about. I don't know. And talking about, it's like Musk has also seen something called X, the Everything app. Right after he buys Twitter, whatever that means, is he going to turn it? They're talking about, speculation, past comments, making it like the Chinese super app WeChat. So WeChat's kind of a combination of like WhatsApp, Twitter, I don't know, everything else all wrapped into one is WeChat. So so we'll watch that. A lot of talk. I mean, part of the rally, I didn't because we weren't on, but I mean, part of the rally that we saw in the past 48 hours from stocks, okay, so far this week, has been driven by the RBA interest rate cut, okay, from Australia. And actually, at the beginning of the week on Monday, when I gave the heads up, we had the RBA and the RBNZ, the Reserve Bank of Australia, Reserve Bank of New Zealand, both in play. I said that they probably wouldn't have too much of an impact on the markets we're trading, but they might have an impact to see if they move, if they're more hawkish, more dovish. Well, you know what? The RBA, surprisingly, has been part of the strong rally that you've seen in stocks. If you're unaware of this, it's definitely part of the rally, okay? The RBA, when they hiked increased interest rate, so it was effectively US times like Monday night through Tuesday morning. Okay, Monday night US time. So we didn't pick it up because there was no webinar yesterday. But the RBA hiked rates less than anticipated. Okay, so that in here smaller than the forecast, and that was then a kind of a wake up call for markets that are central banks beginning to pivot. So you see like pivot doubts. Are they beginning to pivot away from the more aggressive, hawkish tone that we've seen in here throughout 2022? Well, New Zealand last night didn't pivot away. Okay, so they increased interest rates by 0.5 percentage point, as they have done on the that was the 5th straight meeting, as they've done on the 4 previous occasions, and had actually said, in fact, that they considered a bigger increase. So they're kind of stepping and staying hawkish. However, RBA, the Reserve Bank of Australia, were more dovish than anticipated. Okay, so there has been talk of this pivot. Okay, Fed officials actually continue to state in here that the bar for any pivot from the Fed is still high. So they're saying that they are not. So in here, in this article in here, Fed telegraphs where no Aussie-style policy pivot and inflation battle. Okay, it's US central bank unlikely to follow RBA in slowing tightening. Okay, so there we go. Okay, so they're kind of rejecting that, but it's interesting, and that clearly helps and sparked part of the rally in stocks. We were already rallying, as we know, on Monday. That helped the rally, a potential pivot. And this kind of will take us into what I'm going to talk about with the Fed tool, because we did note, I did note on Monday that Fed tool we've been seeing a drop in anticipation over the last week or so. Okay, but I'll come to that when we move to the Fed tool. So OPEC Plus fuels pushback. First face to face, biggest oil production cut since 2020. As I say, we're looking for up to 1 million barrels a day, and we've gone back into a bit of risk off. Okay, so the dollar has resumed its rally. So 2 days of losses for the dollar, 2 days of gains for equities. Incidentally, I posted on the heads up, the scrolling heads up that we have on the members site. So the biggest 2-day gain, for the S&P since 2020. Yes, for Monday, Tuesday. So that's interesting, right? But obviously coming from a low base, coming from a weak position. Okay, so but we have had that kind of a bit of a reversal of that this morning. Stocks back down lower this morning, dollar up, so back more to more of a risk-off move. US 10-year yield back up 6.5 basis points. Okay, as well. So yields pushing back higher. Bond prices going back lower, and then we have and then say a lot coming up in here today. We've already run through all this in here. Bostic OPEC Plus meeting, ADP numbers, S&P Global, and the ISM PMI data. We've already covered all of that. So let's run through some of the highlights from the headlines from the major news wires. Fed telegraphs no Aussie style policy pivot. And here, Wall Street rallies as data. So this is from last night, right? So this is the headlines really from last night's close. Wall Street rallies as data. RBA move lifts hope of Fed easing. Not Fed easing right anytime now, right? This is Fed easing into next year, okay? And then this was the data I was alluding to earlier on regarding why the employment report is becoming more important. US job openings post biggest drop in 2.5 years for August, okay? So that's it. That's significant, right? So that's showing you that the labour market is starting it's been a very tight labour market, okay, but fewer job openings, okay, meaning that potential in here down the line for the labour market to be hit in a more negative way, and then that would also put potentially a brake on the consumer. So policy starting to have an impact, okay. What else we have in here? So Wall Street closes with sharp gains as final quarter begins. So we've spoken about that as well. 2 days up, biggest 2-day rally since 2020 for the S&P. But then overnight in here, equity rally splutters amid fizzling Fed pivot talk. So obviously pivot talks have been in play since the RBA, and then those fizzling they're saying in here. So we've seen European benchmark halts its best 3-day rally since 2020. So also we've seen the European benchmark. So that's going to be the Eurostox, the Eurostox 50 or the Eurostox. Yeah, it should be that. Unless the Bloomberg talk about their own. No, they're not even actually going into what it is in here. Stocks Europe 600. Okay, maybe they're talking about or maybe their own index. But nevertheless, European stock indices lower this morning. US stock futures lower. OPEC Plus heads for deep supply cuts. Clash with US. Okay, so again in here, dropped about 92. So where are we? Spur recovery odds that have dropped. Where are we? $1 million a barrel. Cuts of $1 to $2 million per day. Okay, so that's what we're looking at, and several sources say cuts could be closer to 2 million. So that's kind of our forecast at the moment, 1 to 2 million. Hong Kong stocks surged most since March on return from holiday. Remember, they're playing catch up though. So overnight in here, they were closed. It's Golden Week in China. They've been closed Monday, Tuesday. So overnight for Wednesday morning in here, up 6%. But remember, playing catch up, having been closed Monday, Tuesday. And then again, Morgan Stanley says a bottom near for emerging market equities. So that's interesting. A bullish shift in here from one of the big players on Wall Street, Morgan Stanley, looking for a bottom in emerging market stocks. Dust settles on stock surge. OPEC Plus talks supply cuts. So we've covered that already. And dust settles, the market dipping a bit lower. What else do we have? UK 10-year gilt auction sees stronger. So this is a positive. UK 10-year gilt auction went well, okay, and no doubt because we've got very, very high yields, and obviously we've had a bit of a reversal since we've had the U-turn by the UK government. But then we do have the Tory party, the Conservative Party are having their they're having their, what do they call it, their party conference. So it's the party conference that's kicking off today. The Prime Minister due to speak at that, and ahead of that, we're seeing the pound dipping slightly this morning. And so where are we? As I said in here, European exchanges, European bourses lower this morning by about 3/4 to 1% down, having had strong gains the last 2 days. US exchanges in here having looked nearly 3% up on 3% up on the Nasdaq and nearly 3% on the Dow. 3% up on the S&P, nearly more than that on the Nasdaq. But this morning we're down between 3/4 and 1%, depending on the index. Most of them about 3/4% down. So, not giving back a huge amount of yesterday's gains, but nevertheless giving back enough to concern markets going into today. Okay. I'm now going to take a look at the Fed Watch tool. So we're going to do a look at the Fed Watch tool and how my kind of a little bit of my interpretation of this, how I kind of look at it in my trading. Okay, so there's kind of two things I look at on this page. So just for an explanation, you see the current target rate in here. Okay, so in here the current target rate is 300 to 325. So we know that's where we are. And you see along the top in here we have the tabs. So a little bit of teaching going on now. We're going to look for the Fed Watch tool and how it can be interpreted. So you have these tabs in here of these are the different Fed meeting dates. Okay, so for the next meeting in here, the 2nd of November meeting, we are looking at, and this data is compiled from, it comes from the CME group, okay, and it's compiled from the Eurodollar curve. So the Eurodollar, that's Eurodollar, not EURUSD, okay? It's not the FX, it's the short-term interest rate curve in the US. So it's compiled from that curve, and basically what it does is from that interest rate curve, it works out what the probabilities are for different scenarios. So in here, you see at the bottom, 350 to 375. We're currently at 300 to 325. So this is the probability of a 50 basis point hike increase. 50 basis point increase, and this is the probability of a 75 basis. You see at the bottom, 375 to 400. Okay, so what I'm really watching for is I'm monitoring these over time and seeing as they move up or down, right? So that's one thing I'm doing in here. And they say it's not within the day. This is not for necessarily day trading. This is more for a bigger picture macro view, yeah, how I'm looking at the market. So, and I've been saying, this has been dropping. Remember, this was up at like 70 odd percent, and this has been dropping over the last week as there've been less and less chance of a 75, and this was pushing up previously, right? The more and more chance, and it was like, well, is there really a chance they're going to go 50? That was my question, and this obviously got close to this being towards 50-50. We were looking at this on Monday, and then this has now moved back higher. Why has this moved back higher? Well, initially moving lower, and part of that pushing lower was because all the talk from the RBA of the Fed pivot. Now, kind of that's been a bit dismissed by the Fed. Then this has started to push back higher, and we can see it in a bit more detail. But then we go to this tab over here. So on the left-hand side, you stay on the November the 2nd tab, and we go to historical. And remember, we look at the 375. In here bracket. Okay, so I'm going to untick all of these. So this is giving all the different scenarios. Okay, so we don't want to look at those. I just want to look at the most common scenario here, or the most common two, or the most likely two. So these are the most likely two, right? Going into the November the 2nd meeting, these are the most likely two, and these are obviously going to add up to basically at the moment the two of them to combine are going to add up to 100%, right? Because it's between either 50 or 75. So let's take a look at the 75, and you can see it reached a peak last week some point, of up at nearly 73% chance of a 75, and then we reached a trough days ago when we were looking at a 56. It almost became 50-50 at that point. If I put this back on again, at that point there, it almost became 50-50, as you can see over here. I can't move it, but you see on the left-hand corner there, 53 and 40, basically 53% and 47%. So it almost came 50-50 between the two, whether it's going to be a 50. And now we're moving back higher in here. And more like a 65-35 spread between the two. Okay, so this is showing them a shift back towards a more hawkish tone. So that's what I'm kind of looking at in here. I'm trying to get a sense of what the market's pricing, but then on the backdrop of it's like, well, what do I think? What do I think? Do I think the Fed are really pivoting towards? And when it got down to 50-50, that was probably too generous, right? It's probably too generous to say it's only going to be a 50-50 chance of either a 50 or a 75. So my view there would be, well, the Fed is actually probably more hawkish than that. They'll probably come out and say they're more hawkish than that, and it probably will move back up to here, right? So, and it has done, right? So they have come out and kind of clarified that. So they're not necessarily watching this, but they kind of know where the market sentiment is, okay? And then the other thing I use this for And if I go back to the current in here, I look ahead. You want to look ahead to see where the kind of the peaking rates and where the switching rates is going to be. As you can see, the peaking rates, if we go into the end of the year in here, we're looking for rates to get up to maybe 425, 450. This is now the December meeting. We go to the February meeting up to 450, 475. And then we go further out. It stays at like 450, 475. So by the beginning of this next year, the chances are we're going to be at 450, 475. So it's 150 basis points up from here. Probably 2 more 75 rate hikes, okay? And then we kind of level out. If you look 450, 475, we go into May, 450, 475, okay? And then what we're trying to look for is at some point, does this start to price in further out? You know, and this is what we're starting to price in, a potential for a rate cut coming. So 450, 475 seems to be the peak in rates. And then you're monitoring further out. Okay, then look here now. So June, we see the peak at rates of 450, 475. But maybe it's only going to go to a peak of 425, 450. By July, we're seeing 425, 450. Going into September, 425, 450. November, 425, 450. And then by December, it's kind of starting to edge to 400. So maybe now by the end of next year, maybe even earlier than that, we're looking for a potential rate cut. Okay, so you're looking at where the peak is and then potential where the next rate is. So you're again looking not only in the short term, what are we looking for now, November and December, where the more likely rates are going to be. Okay, but then we're also looking further out where the peaking rates come. And in this case, okay, obviously in different scenarios, at the moment we're going up in rates and then potentially going to peak and come back down again. You know, in different scenarios, you'd be looking at this in different ways. But I'd be looking at where the peaking rate is going to come and then where the turning point and what kind of timeline we're looking at going out into next year for a potential cut. And if we're starting to see cuts coming in earlier, then that's obviously then the market's starting to price in a more dovish Fed again. Okay, so that's my kind of take on how and again, this is not intraday trading. You're not watching this intraday. I don't think they even update. I'm not sure whether they even update it intraday or whether it's end of day. I think it might be end of day updated. I can't really tell you on that. I don't look at it intraday. I just come in, have a look, see which way it's moving. Yeah, so you can see which way it's moving by looking at that historical and then also see the absolute rate. Do I agree with where the absolute rates are? And then looking out further out, where's the peak? Where's the potential peak or trough in rates if you're looking at a rate cutting cycle, but in this case we're at a rate hiking cycle. And then when does we look for the turning rates, and then when we're going to get a shift from either hiking to cutting or cutting to hiking. So I hope that helps. All right. I can't remember who asked the question. Someone asked the question in the chat in the site activity. I hope whoever did ask the question is on today, and if they're not, was it you, Tony, who asked? I don't know who asked. It might have been Clinton. I don't know who asked. But if they're not on today, what we are going to try and do is just cut that segment that I've just done out of today's video, and then we'll post it somewhere in the chat as a little bit of a teaching. Sorry, not on the site. We'll have it as a separate standalone piece of education. Right, I'm going to do a little bit of a tour in here. Of just the what we're looking at right now. So I think we've had a real sea change. If you go take a look at my technicals, I shifted to bullish a couple of days ago. After that move in here, I shifted to more bullish. I'm certainly staying bullish going into today, despite the drop that we've seen in here. I think this is a correction. It's the biggest two back-to-back up days that we've seen in since 2020, so whatever it is, probably over 2 years, right? So no surprise that we've dipped back lower. Let's go and take a look first at the S&P 500 on the dip. You know, I don't think that's a big dip. We have gone through this little swing. You can see this impulsive move that we saw. That was on the cash market open yesterday. So with the cash market open, boom, back down, dip, 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 dip. And now we're kind of stabilizing. We did just undercut this low here, okay? But we've only just undercut that low. So that overnight low, that was like late trading yesterday, you know, just after the close, I think yesterday, okay? Actually, was it there? No, so this was actually yesterday's afternoon session. No, it's yesterday's afternoon session, and then we rebounded into the close, and then it's kind of drifted overnight. So we did undercut that low. That low there was 37.66.5, but only just undercutting. You can see the market was flirting with it, just nudging below, and then doesn't really want to go below. We are trading lower. So I think another push below this low could see us down to here. These lows here, I think these are going to be important. So these little swings. 41.75 and 35. Okay, I think that's going to be a really important support zone. If we can hold there, I fully expect to see us higher into today. If it can't hold there, then lower. But remember, you got a lot in play: ADP, PMI, OPEC, and Fed speakers as well. So there's a lot in play into here today. But I think that's the critical area to hold, really between 40 and 35. If we can hold there, I think we're going to have another up day today. Worst, a positive consolidation day. I do think we'll go back up towards the highs. Okay. And then if we go into the NASDAQ, in here, similar, really strong move. And again, just going back to the S&P, sorry, in the daily, we took out that high there, right? We've also taken out this as well. I don't know if I really even need to draw it on, but this kind of accelerated trend line, we're already up through this one, right? So we're way up through that. And then through that swing peak, that was important, that swing peak there. And then similarly on the NASDAQ, we took out this swing here, the swing higher yesterday, just got above there. We have dipped, we're back below that swing. So that swing high there is from the 28th of September was 11,613.5. The high in here is 675. Okay, and then we've dipped lower. If we go into the 30-minute though, in here, the market has undercut. But again, look, just undercut this low from yesterday, 524 and a quarter. We've just undercut that. But look, holding above these are two lows in here. So these are the equivalent lows. I think we need to hold these 482/66. So 482,466. If we can hold those lows in here, I think we go back higher. And then the lines I think you need to be looking at, if I zoom in a little bit to like 15, is this down counter trend line that comes through here. So I'm going to extend that out, apply, and I'll do this on the S&P as well. So off of this peak in here, it's not the actual high, it's the secondary high. Through this high here, look, you can see we failed exactly at it. I think it needs to get above there, get above these recent peaks. Above the recent peaks, 541, 11,541 on NASDAQ, the equivalent level. I'll zoom in again on here, 15-minute. So you can probably actually take it off the very high in here because the secondary high here, you see the secondary high in the NASDAQ was below here. The secondary high here was above. So you can actually take it off the high in here. And you can see we kind of failed at it as well here. So no shocks there. Right, it failed at there in the last 15-minute bar. We failed right there. No surprises, it's failed there. It's not going to make a more bullish statement before we get the cash open, right? And we've got all this data coming up. So it's failed here. It gets above that peak there. That peak there is high. Where's the high? 37.79 and a quarter. Above there, there was a more bullish outlook. Okay. All right, guys. I'm going to have to skip gold and oil because I've got 1 o'clock call with one of the traders. Okay. So I'm going to have to jump onto that. 1 o'clock my time, that is, not your time. I'm going to have to leave it there, guys. Keep an eye on all that data we've got coming out. Keep an eye on breaking news from OPEC, okay, their announcement. And you get, obviously, the heads up from the oil market on that. I'll be back with you. We actually keep an eye on the chat, Rise, right? Keep an eye on the chat, whether there's a webinar tomorrow. We may not have a webinar tomorrow. Hopefully we will. But if not, I'll catch you on Friday if it doesn't happen tomorrow. Have a great trading day, everyone.